Hi everyone, and all welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec, on Monday the 13th of May. We've got a fairly negative risk outlook today, nothing too decisive, but certainly there's this theme that we've had over the past week or so that's developed, whereby risk appetite has fallen. We've seen volatility, which has been spiking around, actually rising back up again after falling away on Friday, which actually induced a bit of an intraday rally, certainly on the S&P 500. But we've seen that move that's dissipated on the futures. In the US, futures down 1.2%, and you can see this move continuing on equity markets into this week. And not only that, you've got the commodity currencies under pressure: Aussie dollar, Kiwi dollar, and also the Canadian dollar, all underperforming today, at the time at which the Japanese yen is outperforming. So broadly speaking, we're seeing the continuation of this theme that we've got in the past week. Treasury yields are drifting away, and just generally speaking, this is a bit of a risk negative environment, although not decisive, I have to say. And sterling's actually found a bit of support today. 130 big figure seems to be a bit of a floor once more for sterling, so it's helped that higher. But you can see here that the dollar is just beginning to gain a little bit of support, having just drifted back in the past week. It's broadly flat today, only a shade lower there, but broadly speaking, the market is a little bit risk averse today. Now, the move is coming as the trade talks between the US and China continue to come nowhere. Actually, they're not coming up with any conclusive agreement at all, and it seems as though that this is likely to drag now for the coming weeks. The G20 summit at the end of June seems to be a possibility where the US President Trump and Chinese President Xi can actually meet, but again, that's 6 weeks away, so not really getting any resolution at the moment, and that's going to be a drag on sentiment, I think, in the coming weeks. Anyway, that takes me, well, with no major economic releases due today, that takes me to my chart today, which is Aussie yen, and that again is indicative of this risk negative outlook that we've got, where the yen is the general outperformer. Riskier currencies are under pressure. That means the Aussie going down, hence Aussie yen breaking down. 77.50 was an old floor, and that's broken down, and that becomes a basis of resistance, with Friday's reaction high at 77.25 area providing that resistance. That coincides with that downtrend that we've got now for the past 4 weeks. So we can see this market falling away. We've got negative configuration on the momentum indicators, and that would suggest that would suggest rallies are a chance to sell. So using any recovery on an intraday basis back towards this downtrend as that selling opportunity. See here on the hourly chart, the market falls away and forming lower highs, lower lows, negative configuration. Anything around 60 seems to be sold into on the hourly RSI, and around neutral seems to be a selling opportunity on the MACD lines. So the recent reaction low is initial support at 76.35, but then, to be honest, not really much until these January lows, and that's a key area that obviously the market looked at back in 2016, had another look at earlier this year, but the market falling away doesn't bode especially well for the fact that it looks under pressure, and further downside looks likely to be seen. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.